Hey everyone! Welcome back to the channel. In today's video, we're diving into a topic that's gaining a lot of interest: how to start day trading as a beginner in 2025. If you're looking to get into day trading this year, it can feel overwhelming at first, but with the right steps, you can set yourself up for success. So, let's break it down and simplify it for you. Step 1. Understanding what day trading is. Before jumping in, let's first make sure we know exactly what we're getting into. Day trading is all about buying and selling financial assets, stocks, options, or even cryptocurrency, within the same trading day. Unlike long-term investing, day traders take advantage of short-term price fluctuations, often making multiple trades throughout the day. Step 2. Set your goals and expectations. Now, before you put your money at risk, you need to define your goals. Are you aiming to make a steady income, or are you in it for short-term profits? Keep in mind, day trading isn't a get-rich-quick strategy. In fact, the vast majority of day traders lose money. So, be prepared to manage your expectations. Day trading is a skill that takes time to develop. You need to ask yourself, what's your risk tolerance? Can you handle the stress of making quick decisions with real money on the line? Be honest with yourself, and make sure you're in this for the right reasons. Step 3. Do your research and learn the basics. You wouldn't start a new job without learning about it first, right? The same goes for day trading. It's essential to educate yourself. Start by learning the basics. 1. Chart analysis. Understand how to read stock charts. 2. Technical indicators. Familiarize yourself with indicators like moving averages, RSI, and MACD. 3. Market hours. Know when the markets are open. 3. For US stocks, that's 9:30 a.m. to 4 p.m. Eastern Time. 4. Types of trades. Learn the difference between market orders, limit orders, and stop-loss orders. And remember, learning doesn't stop after you start trading. It's a continuous process. Step 4. Choose your day trading platform. Next, you need a reliable platform to make trades. There are plenty of brokers and platforms out there, but some of the top ones for beginners include 1. Robinhood. 2. Webull. 3. E-Trade. 4. TD Ameritrade, Thinkorswim. These platforms offer easy-to-use interfaces and demo accounts where you can practice with virtual money before risking your own. Pro tip: look for platforms that have low commissions and fees, because those fees add up fast. Step 5. Start with a demo account. If you're new to trading, starting with paper trading, a demo account, is key. This way, you can practice buying and selling without using real money. You'll learn how to use your chosen platform, develop your strategy, and build confidence before putting any of your own capital on the line. Step 6. Learn to manage risk. Risk management is critical in day trading. Never risk more than you're willing to lose, and it's smart to set stop-loss orders to automatically close a trade if it goes against you. Risk management strategies include 1. Setting stop losses. Automatically close a losing trade if it drops below a certain price. 2. Position sizing. Don't risk too much of your capital on any single trade. 2. A common rule is to risk no more than 1–2% of your trading account on a single trade. By managing risk, you give yourself the best shot at surviving the ups and downs of day trading. Step 7. Start small and scale gradually. When you're starting out, don't go all in right away. Start with a small amount of capital and trade small amounts at a time. This helps you learn without putting your finances in jeopardy. As you get more comfortable and develop a strategy that works for you, you can scale up your trades. Step 8. Develop a strategy and stick to it. In day trading, you need a solid strategy to guide your decisions. A popular one for beginners is scalping, where you make small, quick trades to profit from minor price movements. Other strategies include 1. Momentum trading. Focus on stocks or assets that are moving quickly in one direction. 2. Range trading. Buying at support levels and selling at resistance levels. Once you've found a strategy that works, stick to it. Avoid making impulsive trades based on emotions, especially fear or greed. It's easy to get caught up in the excitement, but consistency is key to long-term success. Step 9. Keep track of your trades and review your performance. As a beginner, it's crucial to keep a trading journal. Record each trade, why you made it, and what the outcome was. This will help you identify patterns, refine your strategy, and learn from mistakes. Reviewing your performance regularly also lets you see what's working and what's not, so you can keep improving. Step 10. Stay up to date and keep learning. Markets change constantly. Consider the tools and strategies used in day trading. You'll want to keep learning and stay on top of new developments. Follow financial news, join trading communities, and keep refining your strategy as you go. So there you have it, a simple guide to getting started with day trading in 2025. It's not easy, but with the right mindset, education, and practice, you can succeed. If you found this video helpful, make sure to hit the like button and subscribe for more trading tips and financial advice. And, as always, remember to trade smart and stay patient. The markets will still be here tomorrow. See you in the next video.